If a stock gaps up this much, 30%, which is significant, way more than the implied move, but doesn't see very large dips, what does that tell you? So the first one is the opening drive trade, and there was a few variables that we need to look at before determining if we're wanting to take the opening drive. So if you're not familiar with an opening drive, the idea is to take advantage of momentum that exists on the open. It's as simple as that. And there's a couple different variables that we look at to determine whether or not we want to participate in an opening drive. So the first thing we want to look at is if there is confluence on the higher time frame with where the pre-market is at. So there's a 280 level that the stock had on the higher time frame that paired up with this pre-market structure. And then with that, it kind of gives you a basis for where, the trade is going to be near the open and how to approach it with stop losses and targets if price maintains above that price. So this 280 spot, which you can see within the range at 280, was just basing here. Now, this is a very key variable. When we look at an opening drive, we want to pay attention to the pre-market structure. The key thing that stood out to me the most with this structure, which is mostly trending, is the shallow dip. So just think about this logically. If a stock gaps up this much, 30%, which is significant, way more than the implied move, but doesn't see very large dips, what does that tell you? It just tells you there's acceptance higher. No one's in a rush to take profits, and no one's in a rush to try and short against this move. So you have acceptance higher. That's a very key variable to consider when taking not just an opening drive, but considering what the stock might do that day in general. The other thing that we noticed was the RSI. So the RSI is something that we have other videos on that we can link to here that really helped our timing with the opening drives in particular. And it's not so much that we're looking at a direct reading of the RSI. We're actually more interested in seeing a divergence play out or a reset. So what that simply means is after such a big move on the stock itself in the pre-market on the gap up, you can see this is a 15-minute chart. It's just a little easier to see here that on these dips, we've almost entirely reset the RSI, which is just simply telling you that even though the stock made a very large move, there is actually energy available for the stock to move higher. Prices accepted these levels and is prepared to make another move. A lot of people say, oh, it's moved too high, it's not tradable, it's moved too much, and I'm just gonna, sit on the sidelines, or maybe they'll try to short this kind of strength. And knowing what to look for in this example can really help you navigate the trade properly.